What if there is a plan where your money keeps growing without any market risk, and in the same plan, your family is fully covered? If that interests you, a guaranteed savings plan is worth understanding properly, including how the numbers actually work and whether it makes sense for your situation. So today, we are answering what is a guaranteed savings plan in life insurance and is it actually worth buying in India? A guaranteed saving plan in life insurance is a product where the insurer commits to a guaranteed maturity benefit or a guaranteed regular income from the day you sign the policy. In some policies, you may also be eligible for loyalty or guaranteed additions on payment of all premiums. Your returns are contractually locked in, not market linked, based on an IRR calculation applied to standard guaranteed savings plan premiums, incomes and maturity scenarios as of 2026. The actual return on these plans typically ranges from 4 to 7%. The maturity amount is tax-free subject to conditions specified under Section 11, read with Schedule 2 of the Income Tax Act 2025, previously Section 10(10)(d) of the Income Tax Act. In the next 7 to 8 minutes, we will cover how these plans work, what the returns actually look like, who should buy and who should not buy one. A guaranteed savings plan combines two things. First, a savings component where the insurer tells you exactly how much money you will receive during the policy tenure, right from day one. Second, a life cover that keeps your family protected. When you buy one of these plans, the insurer writes the exact payout amounts into your policy document before you sign. IRDAI, the insurance regulator, requires insurers to do this up front. So, what you see on paper is what you get. It is not an estimate, it is not a projection, it is a commitment. Here is how the savings side builds up. At the end of every year, or at fixed intervals, depending on the plan, a set amount gets added to your savings pot or paid to you regularly. The insurer decides this rate when you buy the plan and it does not change. It does not go up or down based on interest rates. It does not depend on how markets are doing. The number keeps going at exactly the pace the insurer committed to on day one. The guaranteed maturity benefit is the lump sum you receive at the end of the policy term. The guaranteed income is the regular payout you receive at regular intervals as opted by you. The amount is declared upfront. You know on day one what you will receive during the policy tenure, assuming all premiums are paid. This is different from a regular endowment plan. In a regular endowment plan, the insurer declares bonuses each year based on how its investment portfolio performs. Those bonuses can go up or down. In a guaranteed savings plan, the returns are fixed from day one. The core payout is not at risk. Your premium goes toward two things. A portion covers your life insurance and the rest builds your guaranteed savings. You pay for a fixed period, typically 5, 7, 10 or 12 years, and the policy runs for a longer term, often up to 40 years in a guaranteed income product and up to 15 to 20 years in a guaranteed maturity product. The actual return you earn on a guaranteed savings plan, after accounting for all the money you put in and when you get it back, typically falls in the range of 4 to 7% per year. Think of it as the real growth rate on your money over the full term of the plan. IRDAI requires insurers to provide a benefit illustration at the point of sale, clearly distinguishing guaranteed and non-guaranteed benefits. Based on those figures across typical plan structures as of 2026, 4 to 7% is what these plans realistically deliver on your policy duration. It is what your money actually grows at, start to finish. A guaranteed savings plan works well in three situations. First, you are a conservative buyer who wants certainty over growth, with a specific financial goal on a fixed timeline. This is ideal for a salaried person in India. Second, you want to plan for a long-term income that works alongside your salary. Third, you want life cover bundled with your savings in one product. Who it may not suit. If you are comfortable with your money going up and down with the market over 15 to 20 years, a guaranteed savings plan will likely give you a slower final amount than the other market-linked options. The certainty comes at a price, and that price is the higher growth you could have had. If you need the freedom to stop paying or take your money out early, these plans are not built for that. Taking money out before the plan ends typically means getting back less than you put in. One thing worth being clear about, guaranteed means the insurer has committed to the number in writing. It does not mean the money will be worth the same in the future as it is today. Rupees 20 lakh in 20 years is still rupees 20 lakh. But prices will have gone up by then. So it will stretch less far. That is a reasonable trade-off if certainty is what you are after. Just go in knowing that. If you are close to making a decision on buying a guaranteed savings plan, here are 3 things worth having clear answers to before you do. What is a guaranteed savings plan in life insurance and how does it work? A guaranteed savings plan locks in your returns from day one, a fixed guaranteed income or a defined maturity benefit at the end of the term. IRDAI requires this guaranteed benefits to be specified in the policy document at issuance, making them contractually binding. You pay premiums for a set number of years, your family is covered throughout, and you receive the guaranteed benefits in your policy. How do you know if the returns on a guaranteed savings plan are actually guaranteed? Look at the benefit illustration that IRDAI requires every insurer to provide at issuance. The guaranteed returns must be a fixed number, not a range, and the maturity benefit, if any, must show the same rupee amount across all return scenarios in the illustration. If the number changes depending on a return assumption, it is not guaranteed. If it stays the same regardless, it is. Third, what is the best guaranteed savings plan for a salaried person in India in 2026? Look at the guaranteed income or maturity benefits stated in the policy document, not projections with variable components. Check the IRR on the guaranteed benefit using benefit illustration. A plan with a 15 to 20-year term and a clear guaranteed benefit structure suits most salaried buyers with medium-term goals. That is how guaranteed savings plans works. What the returns look like, where they make sense and where they do not. I have linked ABSLI's guaranteed savings plan options in the description below. Use the calculator to see your guaranteed maturity or guaranteed income amount based on your premium and tenure. Hit like if this was useful and subscribe for more such content.